Hello and welcome to today's video, which is called Where Next in Risk On. This will be covering equities, US dollar, we'll talk Bitcoin and gold as well, including of course S&P 500 sectors, so plenty to go through. Such was my Saturday's call for equities to turn up, smashing Sunday bullish gap, pointing higher, not offering really any intraday correction to speak of, and those reciprocal tariffs news being superseded by targeted tariffs calmed down some fears as much as positive PMI data in yesterday. So the risk on rally, the bearish squeeze continued, and it is more than a plain oversold rally. But where do we stand today pre-market? Sideways, low volume, and the 4-hour chart clearly shows that buyers are a little bit tired in here, so from the risk-reward point of view, this is not the best place to be chasing stocks. You would have needed to have access to what I had been covering for clients, when it makes greatest sense, where the potential for price upswing is greatest, and that's been clearly made on the weekend. One more sign of where equities might be heading right next is this put to call ratio, which is kind of on the complacency end following Friday's SPX, and this is quite a meaningful signal for maybe swinging back towards the neutral, more balanced positioning from this complacency and leaning so heavily towards calls. This breadth chart, you know that I've been doubting greatly the steep flush in shortest periods of percentages of stocks trading above their shortest periods of moving averages. So that is what has played out, and thanks to broadening breadth, which no bull can really pick fault with, had been strongly supported, and the result was the strong almost 2% appreciation in S&P 500 yesterday. You remember as well my Wednesday's call for US dollar to go higher, and that's what it did. It's turned up. Right now it's forming a red candle. It is a bit of a respite. It's bucking as well the short-term direction in yields, which keep rising just like they did yesterday. So what is the responsible factor for this pre-market decline in US dollar? Is the Japanese yen rather than the euro. Euro had already run, and you can as well see quite clearly that DAX had been having issues extending gains, and were it not for today's candle, it would be in the gutter as those money flows, which I had been as well talking as of prior Wednesday, had been reversing back towards the United States, meaning less money to support that lofty run sky high in DAX and other European equities for good reason. When it comes to yields, this is the responsible factor, rising short-term yields. 10-year is mirroring that. Forget not that services PMI outdid expectations, which is very positive, it is as well positive for future earnings, therefore supporting equities in the run and delivering a greater upswing than it would have been otherwise case without. Of course, that had put pressure on precious metals, where clients had been benefiting from a call made already early Thursday pre-market that prices would be pointing lower, and the same goes for expansion of risk appetite in cryptos, meaning Bitcoin turned, Ethereum followed, and leveraged plays such as MicroStrategy. Now, strategy had benefited mightily. That's the brief overview and couple of parting words towards the stock market. I'm still watching many more sectors beyond financials, and one word about discretionaries. It's been very positive to see them move the way they did yesterday, and it's not just about Tesla value as well. Remember my call late in the week that this upswing is continuing in the direction of higher. So I will be watching big banks, I will be watching consumer discretionaries, I will be watching financials to see how well stocks do when it comes to the currently very short-term overbought position where they can go sideways, little down and reject and continue higher, or burn the remaining fuel and take respite then. These are basically the three scenarios I see ahead for equities today, maybe tomorrow. Forget not that it's about Thursday's unemployment claims, and we will get as well GDP. My joint page will help you decide what's right for you based on what and how you trade. You know my journey and want this infographic and smashing conditions in the financial industry. Dream team like no other is really about obligatory disclaimer, and talk soon again.